Financial Planner. Follow us on YouTube.
X20. The economy is collapsing one city at a time. Let's get into the economic collapse financial news. Now, we've been talking about the housing market and how the housing market isn't doing well. And it's not just here in the United States. It's in many different countries. And up in Canada, what we're seeing is that just over 50% of millennials age 30 owned their own homes. The latest census shows compared to 55% of baby boomers at the same exact age. And what is happening right now is that the cost of these homes, they are very, very high, because since 2011, the census shows the value of homes has steadily increased to a national average of $443,000, up from $345,000. So it looks like it's gone up almost actually it has gone up $100,000. Now, Vancouver has had the highest prices in the country, with the average home value over $1 million. Toronto is around $734,000, Calgary around $527,000, and Montreal came in around $366,000. And what we're seeing right now is that the census data shows that more people are completely out of the market, and they are going to rent their homes instead of purchasing their homes, because these bubbles have been blown up so high that it's completely out of reach to the everyday first-time home buyer or even the existing home buyers. And this cannot be sustained, because when incomes don't, keep pace with the home values, what happens is there's a separation, and we saw this back in 2007, 2008, and eventually these bubbles start to pop. And we've shown many, many graphs of bubbles all over the place, and what we're seeing right now is the top of the bubbles. In many different areas, many different cities, the bubble is starting to pop, and we'll talk about that in a little bit. But I wanted to mention something that happened with gold right now. Now, Mexico announced it would increase its foreign exchange hedging program due to inflation fears. And then all of a sudden, and normally we see the opposite happen, where people will dump, thousands upon thousands of gold future contracts and bring the price of gold down. This time, someone bought 17,000 gold future contracts, over 2 billion notional, driving the precious metals up, not down this time. And that is very interesting, because what we're seeing is that people are starting to listen, they're starting to observe, and they're starting to realize that there is definitely something wrong with the economy. And in all different countries, we are going to see inflation, because the United States sees inflation. Other countries are going to see inflation. Actually, other countries are seeing inflation, but it's going to get much, much worse. Here in the United States, we see that durable good orders, they have stagnated below 2007 highs for the last 4 years. And thanks to a better than expected 2.2% jump in September, the year-on-year gain was an impressive sounding 8.3%. And we could see at this point that this has been driven up by, airplanes and things like that. And it's continually being pushed up. But when you look at it over a period of time since 2011, durable good orders, they have really gone nowhere whatsoever. It's pretty much a flat line, and it goes up, it goes down, but nothing has really happened with durable goods. It's been holding steady, and this is exactly what they wanted to do. They wanted to bring it up with airplane orders or whatever parts and things like that. It comes back down, they readjust the numbers, they revise the numbers, they go back in time, and they continually do this. Now, back to the housing crisis. Here in the United States, we are seeing that there are many cities out there which Case-Shiller looks at, and the Fed looks at this, the corporate media looks at this and says, okay, the housing prices are continually moving up and up and up, and that means the housing market is strong. And then if you look outside the 20 cities, we see that housing is really not that strong. We see outside of the 20 cities, well, there are individuals that are holding onto their homes. The value of the homes are coming down. It's becoming harder and harder to sell these homes. And I think what is happening, just like it happened back in 2008, is that we're going to see this housing crisis occur city by city. And New York is already beginning the process. We also see out in California, San Francisco, the Bay Area, well, it is happening there and in other cities within California. Now, pending home sales in California fell 6% in September compared to a year ago. Now, this is the third month in a row, year over year, that this has declined, after having dropped around 3.5% in August and 2.6% in July. And you need to keep in mind the summer months are the most popular months for housing. This is what the realtors wait for. They wait for the spring and the summer to sell these homes. Now, entering the fall home buying season, the housing market momentum is dead in the water. The California Association of Realtors said in this report that brokers reported slower open house traffic and listing appointments and client presentations fell below positive territory in September. Now, pending home sales, they are an indication of what actual sales might look like over the next few months. And right now, they don't look good out in the San Francisco area. And we're not just seeing it in San Francisco, we're seeing it in other areas. But in San Francisco, the pending home sales plunged by 10.8% year over year after plunging 11.6% in August, 11.5% in July. It was a 12-month in a row of year-over-year declines. In the two counties that make up Silicon Valley, San Mateo and Santa Clara, pending home sales plummeted around 22.4% and 23.5%. Now, in Southern California, pending home sales fell around 7.1% year over year after falling 3.8% in August. And when we look at all the different counties, we see Los Angeles, San Diego, Riverside, San Bernardino. They have fallen between negative 0.8% all the way down to 13.4%. And this is a complete and utter disaster. And what we're seeing right now is we're seeing that the housing market is coming down. Now, think about it. The interest rates are at the lowest point ever. I mean, the only place we can really go is maybe negative. But we are so low with interest rates, and there's, home construction companies saying, listen, we just need buyers. And what we'll do is those people that have student loans, we'll help pay student loans off if they just purchase a home. And we can see that, Fannie Mae, Freddie Mac, they're going to guarantee some of these loans. And we can see that banks now are giving 0%, no money down. They're trying to do everything to get people in to purchase homes. But the everyday American, they're on the sidelines. They're not purchasing. The foreign investments, it is drying up right now. And the hedge funds and investment companies, well, guess what? They can't continually purchase these homes forever. Because once again, they know there's going to be a top and they'll need to sell these homes. And this is what we're seeing right now. We are hitting the top. In some cities, we've already hit the top and we're coming down. So we're going to see a cascading effect city by city, and it's going to start to fall. And we saw this back in 2006, 2007, 2008. Out in California, people were leaving their homes because interest rates started to move up. They had adjustable rate mortgages, they couldn't afford them, and everything started to fall apart. We're seeing the same patterns. They're repeating what happened back in 2008. It's like deja vu. And this is going to spread to city to city to city. And everything outside of those cities where the bubble has been pumped up, it's just going to get worse a lot faster. Because remember, outside of these cities, things are already pretty darn bad. Where people can't sell their homes, prices are coming down, traffic is drying up, and as these Schiller cities start to plummet, guess what? It's going to affect the outer areas, and it's going to hit each city. Now, when is each city going to get hit? Well, we don't know that. But the bigger cities, we can see it's already starting. New York, we know there's a problem. We know there's a problem in the condo market. We're going to see it hit Miami. Actually, we're already getting indication that condo sales are slowing. Speculators are pulling back. San Francisco, we're already seeing that there's a huge problem out there, and this is going to spread. And it's going to get faster and faster. And again, the corporate media and everyone else is not going to know what to do, because once the housing market goes down, people will lose confidence, because people, when they see their homes going up in value, for some reason they think, oh, the economy must be doing well. I feel secure. I can take a home equity line of credit out. I can purchase a new car. I can pay for college. I can put a new roof on the house. And when the values start coming down, people start to get nervous. People start to get scared. They believe the economy is starting to fail. Actually, what's happening is the bubbles that were created by the Federal Reserve, they're starting to pop because we're living in an illusionary world. We're living in a world where they created this illusionary recovery, which really doesn't exist. And when it starts to completely implode on itself, people are going to get very, very nervous. And really, everything is going to start to accelerate all over the place. This is why you need to be ready and prepared for what is coming, because we're already starting to see the beginning stages of this. And once it starts, it's just going to accelerate city to city to city, and it's going to be moving outward, and it's just going to get a lot worse. So get prepared, because here we go.